Now, if you look at NVIDIA, since the introduction of ChatGPT and OpenAI at the end of 2022, you've seen their revenues go up about 4.5 times, not the 15.5 that Cisco saw. And you've seen their stock go up 600%, not the 4,000% that Cisco saw. And so, but Cisco also went through some horrific drawdowns within that rise of 4,000%, where it went down 26% intra-year in 1995, late 95, went down 38% in early 97. It went down 37% from peak to trough in late 1998. The stock was up each of those years, but I think we can all agree those were some horrific drawdowns because you were going through some digestion of all that internet spending. And I think that's what we're in for with NVIDIA right now, which is you're going to get some digestion going on from all of this spend, because when you look at the companies that reported, to large part, their estimates went down in the future. And at a certain point, you have to justify the amount you're spending. And so with NVIDIA, if you think about it from another, several years out, I think revenues will double from here. I think the stock will double from here, but I'm not sure I don't believe the stock's actually seen its lows for the year yet.
Dan, NVIDIA reports on August the 28th, in about 2.5 weeks from now. Given the concentration, given the leadership within NVIDIA, how much of a market event is this going to be, not only at a sector level for the Magnificent Seven, but the market as a whole? And since CapEx is such an important factor here, if they say everything is fine and they maintain the spend or even raise it, to what degree is that going to restore confidence?
Well, I think you framed it perfectly. It's going to be the linchpin around which this market either advances or goes down pretty hard from here. Because if you go back to the internet build out, Cisco might have been the stock that became the most valuable company in the world at one point. But you also had Lucent, Nortel, Alcatel. You had other companies. There really is NVIDIA, and there's pretty much the list falls off dramatically from there. And so it's the one around which this is all built. The thing that troubles me the most, well, there are several things that trouble me. Number one, because it was the only company that had AI-related chips, and you couldn't get them early on, because don't forget, and it's easy for people to forget this, but in early 2022, before we heard of this thing called ChatGPT, NVIDIA pre-announced negatively on the same customers that are now driving this growth. And their revenues were down 6% year over year. Now they're up over 400% year over year. And so now why did they pre-announce in early 2022? It's because their customers, the same ones that are driving their revenue growth now, had to digest all the spending they did the year before. Sound familiar? And so now you're at this point where these customers all were double and triple ordering because they couldn't get the chips they wanted, and they were competing with each other. The chips are now becoming available. Their latest and greatest chip, called Blackwell, is being pushed out, and supply is starting to catch up with demand. So you put that kind of together, and you have the ability for them, I firmly believe they'll beat the quarter in terms of...
Okay, long-term investors. That sounds like a mixed outlook from Dan Niles. The market is trying to rebuild, and so does NVIDIA. Maybe we can take the 20 MA on the daily chart at around $113 next week. But if Dan Niles is correct, then I would not be surprised to see much lower prices in a very weak market. According to Niles, NVIDIA is a double from here, and from lower prices with a potential EPS of $5 in calendar 2025 that Brad Gerstner talked about. This would mean that a price of $200 would just be a PE of 40. The comparatively low PE ratio NVIDIA is trading at, compared to, for example, Chipotle, shows that the market cannot really believe that NVIDIA's future is that bright. But here lies the opportunity, as long as NVIDIA beats and raises on the next earnings report. The next video is from Stacey, Rosgan, who talked about NVIDIA's problems with its Blackwell chips.
The news this week on the delays potentially as a result of sort of design issues around Blackwell. Just give me your take. Is it real, and what's it going to mean?
Yeah, it seems like it's real enough. There's enough smoke there. There's some fire. We've had some confirmation from other folks in the supply chain. Supermicro kind of alluded to it, and so it seems real. It doesn't seem major, right? It seems like a relatively minor design issue. It looks like they may have already fixed it. We've got maybe a 2 to 3 month delay, I think. What that really means is where people were hoping that like real volume shipments would happen in calendar Q4, it looks like it may be Q1, so it's a slight push out. You have to remember, this stuff is difficult to do, so I mean, like even NVIDIA is not necessarily immune to it. In the meantime, though, like we've had hyperscale CapEx guides that are all still going up. All of those would have incorporated whatever is going on. Like they didn't just find out about this, because of the news stories. They would have incorporated it. And NVIDIA's got strong demand for their existing architecture, which is called Hopper, and it looks like they're likely increasing production of that to try to backfill and smooth things over until we actually get the Blackwell launching in more volume, maybe a quarter later. But structurally, I don't think it's that big of an issue. Now sentiment-wise, clearly it's impacted the stock. I think the stock's been two things. One was there's just been a general reduction of sentiment on the AI space in general. People are just starting to look at lots of dollars are getting spent. They're wondering about where's the return. So the sentiment wasn't quite as supportive as it had been. And then you have this on top of it, which weighs on it. So, I mean, that's kind of what's been going on. But structurally, I don't know that anything really has changed with NVIDIA.
Right.
We got a little push out. I think it'll be okay.
All right, well, right. I mean, demand is demand. It's still there, as you point out. What about the stock itself and the multiple and what we've seen in terms of that and whether that makes it even more compelling, I guess, from the perspective of somebody like yourself?
Yeah, look, so NVIDIA's never really been all that expensive. I mean, even at its peak, it was maybe 40 times forward earnings. The sell side forward numbers that's based on are likely still too low. 40 times is about its 5-year median or 5-year average, so it's not actually that expensive. It's cheaper now. It's probably 30 times now. At least I think you've de-risked it a little bit, like going into the back half on the back of this. And if they do announce some kind of a delay, if they verify it on the call, at this point it won't be like everybody kind of knows about it. So yeah, we can kind of work through this. Demand still looks really strong. If you're pushing volume into next year, it actually makes next year look better. Again, more upside to the numbers, hopefully. Yeah, I think the valuation here still looks quite attractive.
Okay. Stacey, I realize you don't actually cover this name, but Applied Materials, we're going to get those results next week.
I cover Applied Materials.
Oh, you do? Okay. I stand corrected. Okay, what are you watching for there, and how much of an indicator is that to the broader semi space as we do look to the second half of the year?
Yeah, so there's a few things. People are clearly watching China semi-cap demand, which has been very strong. Now, AMAT is one of the few companies in semi-cap where they've actually already guided their China mix to be declining as we go into the back half, and so I'd like to see if that's happening. But I think the whole China overbuild worry is not as big of an issue for AMAT maybe as it is for some of the others. Many of their peers have 50% of their revenue coming from China right now. AMAT should be, I think they suggest it should be going down to the low 30s%, which is kind of normal for them by the end of the year. So we'll be watching that. The other thing which I think has influenced a lot of the semi-caps recently was Intel. So Intel just nominally cut CapEx, and that caused some angst. I will say, though, Intel took their CapEx guidance for this year. I guess they said from $33 billion to $26. I actually had to take my CapEx numbers for Intel up, not down. I actually don't know where that $33 billion number came from. I was at 24. I had to take it up to 26. Next year, I took it down a little bit. We had been at 24. I think we're at 21.5 now for Intel. So a minor reduction. But again, the same thing. The semi-caps would have known about whatever Intel is doing before Intel announced it. So I'm not too worried about that. But those are the kind of things that people will be watching for, I think, with AMAT as they report. I think it's on the 15th of next week.
If you like today's content, please leave a like and subscribe to my channel. That would help me a lot. Thank you.